Many of you have asked me for an update on Visa and Mastercard stock. Visa is down 11.5% year to date, and Mastercard is down 6% on the day alone, more than 12% year to date. That doesn't happen very often with companies like Visa and Mastercard. Now, I recently analyzed those stocks like 4 weeks ago, and I told you guys those stocks were kind of fairly valued, but because they have risks that were not presented before, they deserve to trade at a multiples that I didn't really trade at before. And I was mainly a little bit conservative on them, you could say. But I think a lot of the repricing has already happened. Visa right now is trading at 23 times forward earnings. It hasn't traded there in a while. I bought the stock in 2023 back then at 23 times earnings, and it's back to this multiple. Same as MasterCard. It's trading at 25 times earnings, near its 2022 bottom or 2018 bottom even of 23.5 times earnings. This is really amazing to watch. But again, I believe there's a lot of risks that were not presented before, and those risks have only increased over the last few weeks. The first one coming from the ECB, mainly from the EU. Now, the EU has been trying to move away from Visa and MasterCard for the last 10 years. They've been talking about an independent payment system for Europe, but now those talks are becoming more serious, and they're trying to accelerate those kind of discussions and those plans after the current administration and a lot of the things that are happening in the political space. And this is from the ECB president, the European Central Bank. She said Europe needs its own digital payment system urgently, warning that virtually all European card and mobile payment currently runs through non-European infrastructure controlled by Visa, MasterCard, PayPal, or Alipay. And she said when Western sanctions were cut on Russia, off from Visa and MasterCard in 2022, the country's domestic payments were immediately disrupted. European policymakers asked the obvious question, what would happen if the US decided or was pressured to restrict European access to those same networks? This is a very valid question to act. Then they said Visa and MasterCard together, they process approximately 24 trillion in transactions annually. Card payments accounted for 56% of all cashless transactions in the EU, and the data who bought what, where, and when, and for how much leaves European jurisdiction every single time. It's important for us to have digital payments under our control. This is 100% fair, and I think every country should kind of have something like that, and those are valid concerns given what happened during the Russia-Ukraine war when they cut them off SWIFT and they cut them off Visa and MasterCard, and European Union are taking it seriously. And recently, a lot of their banks, some kind of companies, they signed an MOU aimed at creating a fully kind of operating system within the European ecosystem by 2027. I don't know if that's going to happen, but they seem to be taking it seriously. Now, I don't have the exact numbers of what kind of exposure Visa and MasterCard have to the EU as percentage of revenues, but I was able to find this chart of the Visa's payment volume composition between 2023 to 2024, and around 19.7% of Visa's volumes, they come from Europe, and I believe it's likely the same thing for MasterCard. So 19% is a big deal, and I think the market was pricing some of it in as the stock was going down on this news a few weeks ago. But very recently also, President Trump announced a 10% cap rate on interest rates, and people believe that's not going to affect Visa and MasterCard. But you have the president of the largest bank, which is JP Morgan, Jamie Dimon. He thinks that the credit card cap will remove credit for 80% of Americans. It's not going to be 80%, but if it was implemented, a lot of those banks, they are giving credit cards to high-risk customers with low credit scores. They make up for the risk by charging a higher interest rate. If they can't charge a higher rate, they're unlikely to give them credit because they would be too risky, and the bank can't really generate any alpha on that stuff. So some people could lose credit, and if they lose credit, then that's going to affect some of the transaction volume for Visa and MasterCard. I don't believe this issue is as large as European Union potentially moving away from Visa and MasterCard. But this is something else that went wrong. And the last one was from the latest article on X, which I'm sure a lot of you guys read. And this is mainly the future of AI. So by 2027 or 2028, a lot of the transaction will be made from agents to another agent. So you have, let's say, two agents or two AI machines, and they're automatically transacting with each other. Now, because the machines are transacting, they don't have any emotions. They don't care about cashback. They don't care about all these kind of things. They don't really care about using Visa or MasterCard and getting the cashback or whatever. They will try to find the cheapest way possible to transact. And instead of going through the merchants, which is Visa and MasterCard, and letting them collect a 2.5% fee, they could potentially go through some kind of USDC stablecoin on Solana or potentially on Ethereum L2, and that would cost a penny instead of it costing like $2.50. So this is a big deal. I wasn't really paying attention to that before, and I think that makes a lot of sense. But you have a lot of people that are saying that what about something related to refunds? So let's say you have to make a chargeback. How are you going to make a chargeback if you're paying through a USDC or stablecoin? You can't really do chargebacks. How about the fraud protection that Visa and MasterCard are offering? And they offer you so many different services, all bundled up with this specific fee, especially for the merchants in terms of cybersecurity within the MasterCard and a lot of fraud-related detection. How are you going to do all of that with USDC and stablecoins? So unless those things improve in this regard, I don't see how that's going to happen, but this is still, of course, a risk if they decide to use FedNow, which is more of a direct system. It bypasses Visa and MasterCard, and everyone nowadays seems to be against Visa and MasterCard because they're charging very high fees of 2.5% and 2%, and that's, of course, is going to cause them more competition. It's going to kind of narrow their moat. Their moat will still be large, of course, 100% without a doubt, but that's going to add more competition, and all those uncertainties warrant a lower multiple on Visa and MasterCard. And this is exactly what happened to those stocks, with MasterCard trading at 25 times earnings and Visa trading at 23 times earnings. Now, those companies are growing a little bit differently in earnings per share. Visa is growing about 13% on average, expected for the next 2 to 3 years. MasterCard is growing much faster, 15 to 16%, which is really amazing for MasterCard. Based on my latest video, I came up with this calculation as like the worst case scenario on those stocks. So I'm kind of a bottom potential level. And I came up with 23 times earnings on Visa, which is about $294. This is kind of where the stock is at right now. It's trading at $306, within 2 to 3% away from my 23 times earnings worst case scenario. I mean, I highly doubt Visa is going to go to like 20 times earnings or 19 times earnings. It's possible, but those companies are still some kind of monopolies nowadays. They still have over 50% net income margins and little to no capex. They return it all to shareholders through buybacks and dividends. So I don't see the stock going much lower than even 22 or 21 times earnings. But I think right now at 23 times earnings, I think it's very compelling. And that was my price for Visa. For MasterCard, it was 25 times earnings because it grows a little bit faster, which is $478 per share. The stock right now is trading at $496. So I think both Visa and MasterCard are offering a compelling opportunity over here. I think a lot of the risks that people are talking about has likely priced itself in the stocks, especially in Visa, as the article mentions that Visa has an advantage over MasterCard in terms of the ecosystem around stablecoins and stablecoin rails. So that's really interesting. But I believe Visa at 23 times earnings, I would prefer it over MasterCard. I like paying lower multiples in general, and I think Visa here has priced in a lot of those risks. I'm personally not buying Visa yet because I believe a lot of other stocks are going down, like Amazon and Microsoft, as they're growing much faster than 12 and 13% earnings per share. And they have more certainties. They're growing 20, 22%, could potentially grow more. So I like a little bit faster growing stocks, and everything else is going down, so I'm buying other stocks. But if it was just Visa and MasterCard, I'd be buying them. They're great quality companies. But I'm looking for higher growth in general, which is why I still haven't bought Visa and MasterCard. But I think most of them are solid here. I think they're undervalued, and a lot of the stuff got priced in. And that was my quick opinion on Visa and MasterCard. Not a deep dive, just my opinion. Hope you enjoyed it, not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.